Marathon Petroleum Corporation, ticker symbol MPC, is a petroleum refining and marketing company showing strong revenues and solid stock performance over the past 12 months. Its stock price has recently taken a drop of over 20%. However, with oil prices and demand expected to remain elevated in the near term, MPC looks likely to rebound, offering a great opportunity to get in on an options trade. So in this video, I'll outline my reasons for why MPC is my contender for a high conviction trade for stock option premium sellers and traders of the wheel strategy. Also, at the end of this video, I'll be giving a quick update of the past 3 trades I covered in my previous 3 trading idea videos. So stay with the video to see how well we're doing. Before going forward, please understand that this video is made for entertainment purposes only, and none of what I'm about to say in this video constitutes any financial advice. This is my own opinion about a publicly traded company, and I urge you to research it yourself before you make any of your own financial decisions. So with that in mind, my potential trade for next week is to sell to open a put option contract at a strike of 100 with an expiry date of June 16 at a potential premium of around $1.75. I'll be explaining the details of this trade and what led me to select this underlying stock in the rest of this video. Okay, so on to the analysis. Marathon Petroleum Corporation is an American petroleum refining, marketing and transportation company headquartered in Findlay, Ohio. Its 3 main operations are oil refining with 13 refineries in 12 states. Marathon refines up to 2.9 million barrels of crude oil per day. Midstream segment, Marathon transport, stores, distributes and markets crude oil, refined products and gas via pipelines, terminals and various transportation methods. And retail, Marathon and Arco gas stations provide retail fuel from around 7,200 locations in the US and northern Mexico. Marathon Petroleum Corporation is the largest petroleum refinery operator in the United States and is ranked number 18 on the 2022 Fortune 500 list of the largest United States corporations by total revenue. Its origins go back to 1887, when several small oil companies branded together to form the Ohio Oil Company. It went through numerous incarnations until it became the company as it is now in 2011. It has a market cap of $46.6 billion, putting it firmly in the large market cap group. It employs around 18,000 staff throughout its various segments. As you can see, Marathon stock price has flown up since its last IPO in 2011 by almost 420%. Looking more recently, it has by far outperformed the S&P 500 over the past 12 months, showing a 20% increase compared with the S&P 500's 4.6%. However, this year has seen a reversal with a fall of 0.74%. So how about its performance outlook and why have I shortlisted this stock? After running a screener on TradingView, I quickly analysed the resulting stocks, looking at recent earnings and key fundamentals, chart technical analysis, company news and analyst targets. From that data, the stock that stood out was MPC. And why is that? Well, when choosing a stock to trade the options wheel strategy on, you must ask yourself one fundamental question. Would I be happy to own this stock? Now, firstly, its potential premium is pretty good compared to the other underlying stocks. However, high premiums shouldn't be the only selection criteria. Don't forget, if things don't go well, you could end up getting assigned the underlying stock and a poorly performing company may take a long time to recover, or even worse, never return to the heights of the price you ended up buying the stock for, leaving you bag holding a loss-making investment. However, in MPC's case, indicators stood out to me which proved that if I were to be assigned this stock, I would be confident holding it, collecting dividends along the way, and selling it in the near term for a total overall profit. Let's look at the factors which has led to this selection. There appears to be a lot of positive news surrounding MPC at the moment. Earnings were released around 10 days ago, which was a beat by almost 10%, and revenue was also a beat of almost 6%. However, this only resulted in a further fall in stock price of around 14%, of which around 6% has been claimed back since then. The drop after earnings was partly due to Wells Fargo maintaining an equal weight ratio on the stock, while lowering its price target from $135 to $124. More so though, the drop was attributed to the fall in oil prices during the same period. This has led investors to sell off, creating a possible buy opportunity at a discounted price. And it is this opportunity that has fueled recent positive news, such as an article in Stock News giving the stock a buy rating, showcasing the company's dividend growth and higher margins than industry averages. Zacks Equity Research are also bullish on the stock, stating analysts growing optimism over the company's earnings prospects, as indicated by a strong agreement among them in revising EPS estimates higher, could be a legitimate reason for the stock to soar in the near term, concluding that they are giving MPC a Zacks rank of 2, which is a buy. In another article, Stock News goes on to predict a positive forecast for demand for oil and gas, stating, constrained supplies amid geopolitical tensions and increasing global demand for oil and gas, boosted by the reopening of the Chinese economy, could spur oil prices in the upcoming months. And goes on to highlight MPC's solid financials, robust profitability, discounted valuation, and attractive dividend, saying that this could make it a wise portfolio addition now to ensure a steady passive income. Looking more closely at oil prices, a key ingredient in MPC stock price outlook, Capital.com reports that ING, Goldman Sachs, the US Energy Information Administration, and ANZ Research have all raised their forecasts for Brent crude oil prices during 2023 and 2024. Looking at the chart of MPC with oil prices overlaid shows an interesting story. Historically, MPC stock price has closely followed that of oil prices. However, there was a breakaway from that trend 12 months ago. As oil prices have fallen substantially, MPC stock price has remained strong, indicating investors are keen to hold on to their shares due to the strong factors outlined in the Stock News article. The recent drop in price and signs of a rebound raises expectations of a rally based on oil demand and price forecasts. Furthermore, 10 analysts' stock price targets for MPC at tip ranks shows an average upside of 34.87%. The most pessimistic still expecting the price to rise by $14 and the most optimistic looking for a 50% increase. 7 of these analysts rate the stock as a buy and none as a sell. Looking at some key financials, we can see that price to earnings is just 3.32, which is half of the industry average of 6.28, so that's good. They also issue quarterly dividends at a current rate of 2.72%. Their next dividend payout is on the 16th at 0.75 per share, so if you own 100 shares, that would equate to $75 for that quarter. Looking at revenue growth, we can see that revenues have increased substantially, especially since 2020, more than doubling in the 2 years since then to over $174 billion. You can also see huge increases in gross profit and operating income. Net income is growing too to over $16 billion, which is great to see. On to their balance sheet, and their current assets outweigh current liabilities by almost 2 to 1, indicating we have a very stable company here. They also have $8.63 billion in cash, which would more than cover their short-term debt by a factor of 6, so they're in a strong financial position. Over to free cash flow, and as you can see, they have a sizable amount of cash on hand of $15.52 billion, and this has grown substantially over the past 3 years. This means the company is in a healthy situation where it has cash to pay out dividends, buy back shares, make acquisitions, and so on. Just a couple of quick stats. EBITDA margin is in the 14% range, which is good. S&P 500 average is around 10 to 16%. Return on equity is extremely good at 64%. Return on capital is well over the 10% minimum expected, and debt to equity is under 1, indicating that the company is easily funding the majority of its activities. So all in all, this gives me great confidence in the financial health of Marathon Petroleum Corporation. We want to select companies that can survive in times of economic hardship and thrive when things are good. Okay, so here we have the daily chart showing the past 2 years. MPC has been on a very nice upward trend in a very clear channel, bouncing off the 200-day simple moving average. Looking over the past 6 months, the stock has been bouncing nicely off the +2 and -2 standard deviation lines and has recently dropped under the -2 line, bucking against the good earnings report. When a stock gets beaten down like this after a good earnings report, it is often a great place to consider opening a trade, especially in MPC's case with the strong oil demand and prices outlook. It has already started recovering, and I'll be waiting to see if the stock can continue to show signs of strong upwards momentum, pushing above the 200-day simple moving average and 9-day simple moving average before pulling the trigger on a trade. Once this price strength is confirmed, I'll be looking at setting a strike price of around 1.5 standard deviations lower than its current price, which right now would be at the $100 line. There is clear support at the $107 and $105 levels, and also the $100 level where our strike is set. The 14-day RSI fell well below the 50 line and then started moving upwards, showing it is still in oversold territory but looking to push higher. Looking back over the past couple of years, it likes to live in the overbought territory and tends to move back there quite quickly when it drops down. Finally, looking at the option chain for our trade, we can see that at the strike of 100, delta is 0.212, which is good. It should be below 0.3. So come next week, I'll be following this stock closely, watching for the momentum the price needs to push it above the 200-day simple moving average. And as soon as that happens, I'll be opening the trade. Okay, so let's take a quick look at the trades covered in my 3 previous trading idea videos. I opened trades in all 3, as you can see on our wheel strategy tool here, STLD, URBN and TOL. I'll put links to those videos in the description below. Okay, so let's take a quick look at their performance so far. So all 3 have 34 days to run until expiration. Here you can see their strikes and current prices. All are currently above their strikes, although STLD only just. And you can see the underlying price has fallen since I opened the trade, but the support of $95 held up well, 3 times hitting and pushing back off. I'm a little concerned as we're trading below the 200-day simple moving average. I'll be keeping a close eye on this one. So being so close to the strike isn't helping the premium profit. As you can see, we're trading at a current loss of $222. However, this will fall as time decays if we stay above the strike. On to URBN. As you can see, it's trading $2.32 above its strike, and it has performed nicely since opening the trade, rising slightly since then, which you can see in the tools portfolio, $27.21 to $27.32. It's also trending well above the 200-day and 50-day simple moving averages, so it's staying strong. This is currently at a premium profit of $26. I'm happy with this so far, and we'll be looking to hit 60 or 80% price decay here to signal a time to close for a profit somewhere between $154 and $205. Okay, finally TOL. This one's done well in the 5 days since opening the trade. It's $4.21 above its strike, and it's up slightly and trending well above the 200 and 50-day simple moving averages, following the upwards trend of the past 2 months. And this is therefore showing a small premium profit of $3.90, which should increase as time decays and we get closer to expiration. So all in all, I'm happy with 2 of the trades so far and only slightly concerned about STLD. We'll be looking for this one to push up in the coming weeks. And there you go. Hopefully that was a useful and informative video. Please let me know if you want more trade ideas in the future down in the comments below, and also please like and subscribe to receive more options trading idea videos. If you enjoyed this video and want to see more option trading videos, head on over to our website at wheeloptiontraders.com. Here you'll find our options wheel strategy trading video course. We have over 50 videos and counting, from the basics of understanding and trading options through to using the wheel strategy to get the most out of your options trading. We also have an amazing options wheel strategy tool that you can download. It tracks all your trades in real time and provides key insights to help you with your options trading decisions.